students, welcome to my YouTube channel wherein I have started explaining and making accounts simpler for grade 11 students. Okay, so as I promised, every Friday I'll be doing it. So here again I am on Friday 20th of March 20. Alright, guys, you can always contact me via my email, which is already given in the description. So today I move to my next session where I'll be dealing with recording of transactions. Now here I will be splitting this in two sessions because it's a detailed. Now from here we would be doing theory as well as now we are going to move to practical as well. So you need to understand the terms and also solve the questions. So that's why I'm going to split it in two sessions. So this session I'll be completing part of this and next session I'll be completing the remaining one. So far students, we have learned that accounting, I write accounting like this. Accounting involves a process of identifying and analyzing, right? We need to identify what are the transactions or what information I need to record and analyze it. What? Analyze the business transactions. And then what do? We identify, we analyze what? Business transaction, and what we do? We record them. We record, then classify and summarize. We summarize all this business transaction, we record it, we classify, we summarize, and then what do we do with this? We communicate. We communicate to the users. Again we say users are internal, which are inside the company, and external, outside the company. So internal and external. This term we have been dealing, external. This term I have been explaining you from day one. So this is, so far we have understood this, right? Now we move to next step. So this is my page 1. I move to my next step. What are we going to learn today? So in this chapter, we will be discussing the details. We will be discussing the details of steps involved in accounting process. Right? So what we have to do is, first we need to identify transactions which needs to be recorded, right? And then we have to prepare the documents. So we have to preparing of the documents, prepare the documents. So these documents will be recorded in my books of accounts. Books of accounts. Books of accounts, I have to begin with my books of original entry. These are called journal. Here you will just understand the terms, and then as we move further, it will become very easy for you to understand and use these words and apply it. So we are books of accounts, original entry, and then which are called journal. And then these from here, it is posted in the main books, which are called ledgers. right? So we have learned three terms here. Here, terms what we have learned is ledgers, journal, which are original book of entry, and we prepare the documents. So we begin with recording, analyzing, recording, then documentation is done, and then it's entered in book of original entry journal, and then it goes to ledger. So these are the steps I'll be discussing with you today. Now, if we move in a more systematic manner, here I just told you the summary of it. Now I'll be telling what am I going to complete in 2 sessions. Alright, for me, let me keep this aside, and then I'm going to complete for you. So after this class, as I told you, this class is recording of transactions, right? This class is recording of transactions. So in this what am I going to learn? So I say vault. I always tell my children, what am I learning today? So I'm going to learn here is, first is I will describe the nature of transactions and source documents, and then I'm going to move to next explain the preparation of accounting vouchers, which are basically, now preparation of accounting vouchers is mainly done for petty items, which I'll be explaining you. Don't bother about it right now. I will explain you what is the difference and how does it function. And then I'll be explaining you accounting equations. And then next is understand debit and credit in accounting and its rules. Fine? And then we will move to concept of book of original entry and its recording. In where the book of original entry is recorded. Here I have told you original entry is recorded in journal. So I'll be recording the transaction in the book of original entry in journal. That the book is called journal, okay? And then next is concept of ledger. So after journal, what do? We post it in the ledger. So concept of ledger. What is ledger? How does it work? Concept of ledger and its postings. Okay? So, but today I'll not be completing all this because it will become too cumbersome, too much for you to handle. So today I'll be describe the nature and transaction source document, explain the preparation of accounting voucher, accounting equations, and understand the debit and credit in accounting and its roles. Till here we will do today, alright? So I'll keep it aside for my future reference, which I'll be taking up so that I can show you what we have completed today, right? Now, we move to the first point. The first point I'm going to deal is, as I told you, describe the nature of transaction and source of documents. Nature of transactions and source of document. So what happens here is, do I need? No, I don't need this. Now, nature of transaction and its source. For example, you need to decide what kind of transaction is it, right? So what we have to do is, for example, if I say uh, purchase of, let's say, what example can I give? Okay, this is very easy. Purchase of laptop, right? So if I buy laptop worth of rupees 50,000, all right? If I buy a laptop of rupees 50,000, so what am I doing here? What happens? How would the company know that this laptop was bought? So when you buy a laptop, if I go to a shop to buy a laptop, what they give me? They give me a cash invoice, right? A bill. They give me a cash invoice, a bill, and then I make payment, right? Payment. If I go in as an individual, I pay by cash, or a companies can give a check also. So what happens here? What does this form? This forms my source of document for recording. For example, in a company, if a laptop is bought for one of the employees, so this cash invoice has to be given to the accountant as a proof of purchase of the laptop, right? Similarly, you can think about the salary paid. So when you pay salary, the salary slip is your proof, and money, the cash is paid, right? Now, this is the document. These are the source of document which we need for each and every entry. Now the next step what I'm going to discuss with you is explain the preparation of accounting vouchers, right? Now I move to the next one. This is third. I move to the next one. Fourth. So second point I'm going to discuss is preparation of accounting vouchers. Now the voucher can be when you go and buy a product. When the company buys a product, it can either buy via cash, or it can take it on credit, pay later. Because when they develop a reputation, the supplier is ready to supply bulk quantity on credit. So you get a cash invoice, the company gets a cash invoice or cash bill, or it gets a credit invoice or credit bill, right? So, but now what happens here? But this forms is a documentary evidence, proof of recording. But for petty items, example, conveyance or bus travel or something which you don't get the bill, what do? We prepare a company has a vouchers, its own vouchers, where the employee fills it up. It is signed by the authorized signatory, okay, approved, and then that is taken by an accountant as a proof of recording that expense. All right. So how is that voucher? That voucher looks like this, something like this, okay, which is very easy to. You would have seen. If your parents are working, you can ask them how does it look like. So here is the transaction. This is the name, transaction voucher, and then the company's name of the firm. Let's say ABC company, all right? And then we have the voucher number here, and then we have date, then debit account, which I will explain you, don't bother, don't worry, okay? Just understand how the voucher looks like. Debit account, and then you have a credit account, then you have amount, and then you will have narration here. What is the purpose? Okay, they will have narration here. And then in the end you will have a authorized signatories. They will be signing here, and who is going to prepare it? The accountant or the person who is submitting it, okay? Prepared by, for example, I am an employee, I use my conveyance of, let's say, rupees 250. So I cannot generate the bill. So this is how I'll fill up the voucher, explain my travel. So I'll prepare, give it to the accountant. It will be authorized, signed by my manager, and submit to the accounts department. So this is petty items, small items which we don't get billed for, right? So this is what is the number 2. So we have already described the nature of transaction, source document, and I've explained you what are the accounting vouchers which are prepared for petty items. Now we move to next, accounting equation. This is very important for your understanding, and then we'll be using this further in future. Now I move to the next one, accounting equations. Now, talking about accounting equations, what do you mean by equation? We have done in maths in earlier classes, right? Grade 9, grade 7, 8. We have done equations in mathematics. Okay. One more thing I wanted to tell you about this voucher. The things which are mandatory is name of the firm must be there, the voucher number should be there, date, what account, what is the expense, are you paying by cash, how much is the amount, narration, who is preparing, who is authorized signatory, all this should be mentioned. Of course, your firm's name should be there. So it becomes, there is no ambiguity involved in that at that point of time, right? So we move to accounting equation. Now what does accounting equation mean? It signifies that my assets are equal to liabilities and capital. Now what is capital? Capital is also called as owner's equity. Okay? Remember, I have told you earlier, assets are which belongs to the company, liabilities are which company owes. So owns and owes, right? Which I have explained you. And what is capital? Capital is when the proprietor brings in the money for beginning of for starting a company or starting the sole proprietor, sole trading business or partnership. So it is a claim of the proprietor. Alright? Now, there are certain equations which you need to understand. Usually assets, liabilities, capital, it is reflected in the balance sheet, which you will learn in detail later. Balance sheet is what? I will explain you that, okay? Before that, let me finish this equation. So my assets are always equal to liability plus capital, and capital, this in turn you can just turn around and do. Capital is equal to asset minus liability, and liability is equal to asset minus capital. Now, this equation is also known as my balance sheet equation. Alright, this is also known as balance sheet equation. Now, what is balance sheet? I told you, I'll tell you, right? What is balance sheet? Balance sheet, 1 minute. Balance sheet states the financial position of the business on a particular day or as on that day. Okay, so it is a statement of financial position, how much company owns, how much company owes, and what is the claim of proprietor in the firm, in the business. So balance sheet, in other words, you can say balance sheet is a statement. We always say statement because it's prepared as on that day. It is a statement of assets, liabilities and capital. Again, as on that day. It is prepared on a particular day. Now, to bring clarity to this, I'll explain you by way of an example. Let's see you have understood. Asset is equal to liabilities plus capital, and balance sheet is it states the financial position of the business on a particular day. Right? Now, for example, let's say I take an example. Sunil started business with a capital of rupees 500,000, or you can say rupees 5 lakhs, right? Now, if first this statement this is the information which has come to me, so I need to analyze it. So while analyzing it, what do I analyze? I analyze that he is bringing in money. So this is his capital, right? So he's bringing in money, so cash comes in, right? Comes in. And what am I going to credit? Because dual aspect. Remember the concept dual aspect? Every debit must have a credit. So what comes in? There has to be something. Come, go. Debit, credit. So cash comes in and it's a liability. So I'm going to credit. That means my capital will have the firm's capital will have the second effect, right? So if I have to record this in my balance sheet, it's a T account, right? It's always a T account in my balance sheet. Here I always have a liability, and here is always asset. So asset is owes. Remember? Owes. Sorry. O-W-E-S. Owes. Alright? So what cash comes in? So my bank or cash has 5 lakh, and the company has to pay. It's a proprietor's. Remember I said capital is a claim of the proprietor, right? So it is his claim. So this is a company, the firm owes. So here I will write capital 5 lakh. So always balance sheet is in this form, just the beginning for you to understand. It's okay, we will be doing it in detail. So I just explained you how does it work, right? So we are done with, I hope you are clear on this now. Do you want me to take one more example? Okay, I'll take one more example on this. Another example what I will take here is, for example, goods purchased from Messrs. Ranjan Traders. Example, okay? How much is the amount? You know everything has to be monetary, for rupees 55,000. Now, what is coming in? What is becoming mine? Owns. Company is going to own this good. So this will be my asset, right? But whom I have to pay? The company has to pay Ranjan Traders. So this is owes. Company owes to this. So this is my liability. I have to pay this. Okay? This is owns. Company starts owning the goods and it has to pay. So this is the concept about the accounting equation. Accounting equation is also called, I explained earlier, sorry. The accounting equations are also called balance sheet equation. That's why I had to explain you this as well. Now I move to the next one. My next topic here is, today's subtopic is understand. See here, I'm going to do this. Understand debit or credit in accounting and its rules. Okay, so as already I have stated that every transaction always involves give and take. All right, so let me write this. Understand debit or credit in accounting and its rules, right? Okay, so what am I going to do here? Understand debit and credit in and its rules. I have been saying all this while that each transaction involves give and take aspect, right? So it always has a give and take. As I had drawn balance sheet for you, so each entry has to be recorded in a T form. So we call it T account. We call it T account. It's like this, okay? See, T account. Now here I will write name of the account. Here will be debit and here is the credit. Debit is always on left side of you and credit is always on the right side of you. This is what we do, left and right. Okay, each account head will be T. Everything will record it like this. So always what happens is, as we have learned for earlier, dual aspect. So each debit will have a respective credit. Each give will have a take, each take will have a give. This is what we have learned for earlier, right? So the same thing I'm going to emphasize further. This we have understood, right? For example, if I have to open a salary account, because I don't have one staff in my organization, there are many employees. So I open one salary account for all the employees. So this side will show debit and this will show credit. This is how my T account will reflect. So in your ledger, you will make T accounts, which will be doing, going forward, we'll be doing it step by step. Now, understood debit and credit in accounting and its rules. Now I'm going to tell you about the rules. The last step for today. Today I'm going to take only 4, I said, describing the nature of transaction and source of document, explain preparation of accounting vouchers, that is petty items, how do we record it, what is a proof, documentary evidence, accounting equations, these are also called as balance sheet equations, and understanding debit and credit in accounting and its rules. So I'm going to tell you the rules of accounting. Rules of debit and credit. Right? It's very easy for you to remember. There are 3 rules which you will do in detail and it will be very, very easy. First rule is, I should always say, debit what comes in and credit what goes out. This I'll be telling you with the help of an example. Okay? Second is debit all the expenses and losses and credit all the incomes and gains. Again, this I'll tell you. And the last one is debit the receiver and credit the giver. Again, I'll tell you by way of example. Now, the first example here I'll tell you, debit what comes in, credit what goes out. For example, if I say here, example, here I will be giving you examples, okay? I hope you all can see, or I will use this black pen. Examples. Debit what comes in, credit what goes out. For example, if I say purchase of machine worth rupees 10,000. Now, if the company is going to buy this, what's coming in? Now machine comes in. So I'm going to debit it. So I will debit it. And what's going out? Because I'm paying by way of cash. So I will say cash credit. Did we get it? Debit what comes in, credit what goes out. And the second example for this is A. For B, I will say debit all the expenses and losses, credit all the incomes and gains. For debit all the expenses and losses, for example, I am paying salary. Now again here, debit all the expenses and losses. This is an example. Paying for machine is an expense. I'll take here. First one is salary paid. For salary paid, rupees 5,000. I will say debit all the expenses or loss. This is an expense for the company, so I'm going to debit it. So I'll say salary account debit with this amount. And what I'm going to credit to cash. I'll credit cash. Right? Second is credit all the incomes and gains. For example, the company receives sales commission. Sales commission, right? It's an income. Sales commission of rupees 8,000. So the entry for this will be credit all the income and gains. So what's coming in? My cash, money is coming in, right? So I'll say cash account debit, and I'm going to credit all the incomes and gains. So to sales credit, commission credit, right? Okay, this is done. The next one is debit the receiver, credit the giver. For example, here I bought goods worth rupees 20,000 from XYZ. Okay. So bought goods worth 20,000 from XYZ. So here again, I have to debit the receiver and credit the giver. 1 minute, yeah. Bought goods worth 20,000 from XYZ. So again I will say, what's coming in here now? My goods. So I will say purchase account, or I will say goods. Okay, for your easy understanding, I will debit it with 20,000. And who is giving it to me? XYZ, credit the giver. So I'll say to XYZ credit. Did we understand? Purchase account debit, because I'm going to debit with what is coming in, or goods account debit. Who is giving me? The XYZ is giving me. He is giving me. Credit the giver. The same thing can be done. This is first. The second, because I'm just completing, I want to finish it here. The second aspect is if I take sale of rupees 15,000 to ABC. Now I'm selling goods to whom? ABC. That means ABC has to pay me, right? So I'm going to debit the receiver. He is going to pay me. He is the receiving one. So I'll say ABC, he is the debit, and what's going out? Going out is my goods, to goods. So I will going to credit it. Right? Did we understand? Debit the receiver, credit the giver. So guys, with this, I complete today's class. I don't want to pull more because this itself is little, you have to understand it more. Rules of debit, I again reiterate it for you. Rules of debit and credit. Debit what comes in, credit what goes out. Forget all this. Debit what comes in, credit what goes out. So when I purchase machinery of 10,000 rupees, so what's coming in? Machine. And what's going out? Cash. So I'm paying cash. I'm going to credit this, right? The second is debit all the expenses and losses, credit all the incomes and gains. So I'm going to debit all the expenses or losses. So salary paid 5,000 rupees. So I'm going to debit this as an expense. I will debit it. And by what? Forget this. This if you don't want to see, don't see. Because I'm explaining you this concept. But then when I pay salary, I'll pay by cash or bank. Okay? So credit your cash or bank. What goes out? and credit all the income and gains. If I receive sales commission, I'm going to credit this. What is coming in? Cash. So cash comes in and I'm going to credit this income. So here you need to understand, I'm going to, here is the main highlighting. I'm going to debit my expense and I'm going to credit all the incomes and gains. The last one is debit the receiver and credit the giver. Debit the receiver, credit the giver. So when I buy goods worth 20,000 from XYZ, he is giving me. So I'm going to credit this fellow because he's going to give me goods. So good is coming in, that you have understood from here. Debit what comes in and credit the giver, he is giving me. And in the first case, debit the receiver. When I sell good, my good is going out, but who is going to receive? The ABC. So debit the receiver. These are the points which you need to consider. Right? Okay guys, so we have completed till understanding of debit and credit in accounting and its rules, right? The next two classes, again I will explain you in brief this, and then we move to how the entries are recorded in journal and how the ledger and its posting is done. So thank you very much for watching my channel. So let's have a good time guys, enjoy, and let's hope that you all have understood. You can always contact me via my email which is in the description. My name is Ms. Shilpi Mishra and I have been teaching accounts for past 10 plus years, and by God's grace all my students really they are happy and they have been getting AA plus. So let's hope best for you guys. Bye bye. Don't forget to view, like and subscribe my video. Thank you. Bye bye. सुयश हो गया?
I know you